And welcome everyone who's joined so far. Welcome to our webinar. My name is Jeta Boksha and I coordinate marketing and communications for Russmedia Equity Partners. And together with Eugen and Markus, I will be your host in today's session. But yeah, as you said, before the intro, there's even more boring part, which is some logistical matters. And that's where I encourage everyone to open your microphone, open your camera, and let's just have an open and engaging conversation. So, you know, make best of it. If chat is still handy, then if you have any questions, just feel free to type your questions in the chat box at any time, and we'll make sure to address all of them. In fact, just another logistical matter, I think it would be interesting to see who's here and what's the profile. And for that, we prepared a quick poll. Matthias will help us with that, and a question will pop up on your screen in just a minute. Please answer the answer that best fits your role, either investor, entrepreneur, M&A advisor, or other. It's completely anonymous. It's all right. And Matthias, when you're ready, you can also share it so we also know the result. All right, so entrepreneurs and others so far. Now about the topic, why we met here today. We want to talk about what entrepreneurs need to know about selling a company, and we're going to use Bergfex as an example and to illustrate our learnings from this. And as you probably know, for most of you that are entrepreneurs, the day-by-day operations take a lot of time and energy, and sometimes you don't even have time to get involved in the process of selling your company while running your business full time. So that's why Eugen and Markus will tell us how they managed to go through this process and what's their advice on this. Eugen is managing partner at Russmedia Equity Partners, for those of you who don't know him yet, and Markus is CEO and co-founder at Bergfex. And I guess it's better if you introduce yourself.
So thank you very much. I may introduce myself. I'm Markus Kümmel, founder and CEO of Bergfex. And I just want to give you a short overview of our history and of our development of our business. So I founded Bergfex with two partners in 1999, a long time ago, yes, for websites. And if I have a look at the website here, it's almost difficult to say how much changed until now. I'm not sure how much it is, but yes, the beginning was we all three are passionate skiers and snowboarders, and we wanted to display the snow heights on a website. So we started our business in 1999 with a database website for all ski resorts. We started with Austria, Switzerland, then joined Italy and Germany. 3 years later, the demand of ski resorts in the summer and tourism resorts was so high, so we also started with a summer website, so where we displayed tours, mountain bike, hiking tours, and also all summer destinations in the Alps. Today, we have a lot of different products, and we are available in 18 languages. So at the moment, our main business is in accommodations. We have about 8,000 hotels in the Alps and about 7,000 tourism destinations. And the traffic on our website increased in the last few years very strong. So we've been 2 times the website with the most reach in Austria, and with 65 million unique users on Bergfex in a year, we reach a huge user group just for auto sports. Thanks a lot.
You kept the map on the top left.
Yeah.
I saw from the original webpage.
I've just seen the picture before, and it's 20 years ago in the website before.
It's called consistency. Alrighty, then I'll be quick. I think it's more interesting to get into the discussion and introducing Russmedia Equity Partners. So my name is Eugen. I'm one of the two managing partners at Russmedia Equity Partners. We're a fund that invests into sustainable, profitable niche marketplaces and SaaS companies across Europe. We have 11 majority holdings. We have another 12 minority holdings. One of the majority holdings that we're invested in is Bergfex. And maybe if you can show that the slide that we've prepared for this, and I can quickly walk you through. But it's really the focus that we have is on these niche marketplaces and SaaS companies that are all profitable. And if you look at I think this gives you a good overview. In what we do, we're situated between a venture capital fund and a private equity fund. I'll just point out some of these criteria. The most important is probably where we're positioned in revenue growth, or the growth stage of the company. So VC will usually look at companies that grow over 100% year over year. Otherwise, it's not interesting. Our portfolio is mostly below 30% year over year growth. We hope to accelerate that. So that's really when we enter the company, and we hope that we can add value in accelerating that, and we usually do. We look at profitable companies between $500,000 and $5 million in EBIT when we enter. And the last one that I would say is important is that the total addressable market that we look at, a VC will always look at a market that is over $1 billion. Why? Because they're going to invest. Their strategy is about investing into, usually a seed fund will invest into 30 companies, and each one of the companies needs to have the potential to become a fund returner. So an investment of, in that case, 5% of the total fund into one company needs to have the potential to return the entire fund. And that can only be achieved if the total addressable market is above $1 billion. And obviously there are a lot of VCs out there, so there's a whole lot of competition in that kind of segment. And so we look at segments that are under 100 million. I think Bergfex is a great example for that, because they're focused on outdoor sports in the Alpine region, and that is definitely a very niche region, or very niche area with a TAM of a total addressable market of less than 100 million. Then maybe last but not least, we look at usual entry ticket size between 3 and 25 million euros. And perhaps the most important thing, we aim for a majority, but we don't aim for buying 100%. We usually have our partners have at least 20% stake in the companies, and like Markus at Bergfex, run the business operationally. So we provide a network where we provide know-how and a platform for know-how exchange, and access to other entrepreneurs and access to other experts within marketing, sales, product development, BI, but we don't get operationally involved. And so this is our philosophy. We believe in working with partners who have skin in the game in the companies they run. So more of a network of entrepreneurs than a fund per se.
That sounds really cool. Thank you for the introduction. And before we get to some of the questions I have for you, I want to remind the audience that you can address any questions at any time, either by opening your microphone and camera, or just by typing in into the chat box. So Markus, you've been with Bergfex and you founded the company many years ago. When did you decide it might be a good time to look for a partner?
It was at the beginning of last year in January. We decided to look for a strategical partner for Bergfex. And then also in the same time, we decided to make a process with a professional advisor. It was just 3 months before the pandemic started. And we are just a travel website and outdoor. So it was, after 3 months, it was very difficult because we just, all accommodation were closed, ski resorts were closed. So, but we didn't know that 3 months before.
But is this something that you also considered in the past, or what was your basic motivation for getting a partner?
The basic motivation was for a strategic partner was to develop our business, because we were running Bergfex for more than 20 years, me and my 2 partners, and altogether we've been at this time about 12 to 15 people. That means we were a very small team, and the decision was because we had a lot of, we still have an increase in traffic and downloads of our apps, but we've seen that our passion is in developing our products, and we have a lot of user and area and divisions. They're not covered until now, still now, and where we've seen that we don't have the expertise in that. So, for example, we have really a lot of traffic in Switzerland, Germany, or South Tyrol, but we've never had a sales team over there.
So you were hoping one of the missions was to expand your team, basically.
Expand your team, but get the expertise from our partner, because we wanted to stay in what we think we are good, that we are developing products for users. We are all more from the technical side, so all my partners and me as well. And there are a lot of areas like online marketing and sales, especially where we didn't have the expertise.
So what did the profile of the investor, of the partner, look like? What were you looking for?
I've seen a lot of sales in his before, also from friends of mine, and so we were definitely looking at the beginning for a strategic partner where we have a good match with that where we also want to expand. So no, we didn't need some investments in our company, so it was really only or especially for developing our business.
So it's not only the funding, but more also the expertise of growing the business.
Correct.
And I know that Russmedia Equity Partners approached you in the past as well. And then again, what made you change your mind, and what made you think it's the right thing to do?
Yes, in the last 5-7 years, I had about 3 to 5 meetings every year, because other partners want to invest in, or companies wanted to invest in Bergfex. So most time I had a flight to Germany. They told me what they wanted to do with Bergfex, and then I took the flight home again. And so when we decided to find a strategic partner, it was clear for me that we have to look at different companies, because if we just get asked by one, it was very difficult to find the right one.
So basically no one asked you what it is that you want to do and how do you want to develop the company. That's what I'm hearing, right?
Yes, correct.
And how about you, Eugen? What, besides the sweet spot for Russmedia Equity Partners that you just mentioned earlier, what made you think that Bergfex is a good addition to your portfolio?
So maybe I'll first tell how we actually got to know each other, or how we've obviously known Bergfex for a long time, and we've been following them very closely and what Bergfex has been doing, and then we were just at our biannual management meeting in Innsbruck, and when Markus called and he said, you know, and I first think he didn't want to say we're selling or we're actually looking for investor, and it took me 10 minutes to figure out, okay, they're looking for an investor now, right? And that's how the whole process started. And so what made, so your question was what made us or what got us excited about Bergfex as a first, the history,
in other words, yeah,
and their very strong brand reputation within Austria, and the fact that the brand comes with a lot of very loyal customers, and through the talks we had over time, we got more and more convinced that there was still a lot of potential, that we believed that we could work on together. And I hope I'm okay to say this, but I think your original plan was to sell out completely, because I think that was the only option that a lot of the other investors had on the table. And so as we worked through what we call due diligence, but it's really us understanding the business and trying to figure out together with our partners what is the best way forward, we got to know each other. And I think you especially got more and more excited about the prospect of running this business together going forward. And so what started as a 100% acquisition, which we never wanted to do, and you know that, then turned out into what we were really aiming at, and that is the partnership that we have now. We're all the three founders, Oliver, Andreas, and Markus, stay in the business, and now we have a fourth equity partner with Alexander, who's now the co-CEO together with Markus. And continue running the business together, and that is really a prospect that excites us, and there are so many things that we can work on together.
So what would you say was one of the most difficult steps throughout this entire process, Markus? Besides, of course, identifying the right partner, but when you already decided between yourselves, this is the way to go, how do you manage to build trust and make sure that this is indeed the right decision? These are people we can trust and we can work together with in the future. How do you build that?
This was really one of the most difficult steps, because we had at the beginning, we had a long list from our advisor, and then a short list with 10 companies on the table, and it from completely different. They've been completely different brands, companies. For example, I had talks from 11 p.m. until 3 a.m. With companies in the States. So, for example, accuweather.com, and because of the time difference, we had to talk a lot in the night, and it was very exciting to see how the companies wanted to integrate Bergfex in their portfolio. And we also had from Switzerland, and most of the companies have been from Germany. And so we really talked a lot, had 4, 5, 6 hour calls 3 times a week. And so we decided the trust was, we wanted to build our company in the way we do it. And a lot of companies just want to change it, or they give you, for example, a business plan where you already know it's completely impossible to reach the goals. So that was one of the most important trusts where we had to look. So, and with Eugen, we could talk very often. So it was open. It was also an open discussion every time we had, and especially it was with Russmedia. It was the only, I have to say, the only company who allowed us to call different equity partners, how they see, really, there was a lot of trust, how they work 3 years after they got Russmedia as a partner.
Okay. And you mentioned the plans that some of the companies you were talking to were advancing and how some of them were, well, practically unreachable. How did that go with Russmedia? What was the strategy, of course, in terms that you can develop, but the structure of it and how you got to then implement that strategy?
What was very important for us was that Russmedia was did have the same goals we have. So it was they wanted to develop our, for example, our departure for apps, for accommodations, online marketing, exactly what we were thinking of for our own. And other companies, it was difficult because they just wanted to use our reach, our traffic, and integrate it completely in their billion euro companies, and that wasn't what we were looking for. So Russmedia, they gave us just the network and the opportunities to talk to different companies, that we don't have to look for each on our own, and that was especially also on the technical side. So we've learned a lot in the last 9 months. And so it was like a network helping us developing our business.
So it was not just developing a plan and a strategy, but it was also a learning process for you and your team.
Yes.
Mm-hmm. And how about from the investor's perspective? Is this kind of plan easy to implement, or what are the usual challenges that you encounter along the way?
Define plan, please.
You know, the strategy that you develop together with your potential partner during negotiations. What needs to be done? What are some of the measures that you'll implement after they are on board and such?
Look, I think that is usually the easiest part, is to define a strategy and to come up with a strategy. The difficult part is then to implement the strategy, and that takes time. So technically what we do is we during what we call the commercial due diligence is we talk and we look at the company and we ask a lot of questions and we have a lot of discussions, and we had them. I think there were several meetings that we had in Munich, here in Graz, and in Vienna, and then we come up with where we see potential, and we prioritize these potentials, and then we work out what we call a 100-day plan, and we say, look, when we start working together, these are the things we're going to do in the first 100 days. And it's very specific. Sometimes it's as specific as to saying, you know, we have to change bookkeeping and start deferring revenues. And other times it's that we say we're going to insource the sales team. And usually that 100-day plan, why do we do this? There are 2 reasons for this. The first one is, whenever you close a transaction, it's from the founder's perspective, it's the biggest thing they have done with the company ever since they started, right? It is the exit, and so usually it gets to, you close the deal and it feels woof, and everyone is kind of, you know, laying back, and that's what you have to avoid, because the idea is when we enter that there is new energy and we move forward, and we want to do that from day 1 onwards. And the second thing is that because we want to continue working with the founders, we should be perfectly aligned of what we want to do with the company and what we don't want to do. So I remember one of your main concerns, and especially that of Andreas, has been that if a new investor comes in, they're gonna completely fill our page with adverts. So it's a banner advertising. And we very clearly said that that's not what we're gonna do, and we agreed on not doing this. And I hope so far we have not, and we're not gonna do that either. But one thing that we said we're going to do, and it actually happened a bit faster than we thought, is that we had an external sales team, and we said we're going to completely internalize the sales team. And that is what we worked on. We also said that we want a second managing director. We decided together who helps supports Markus on the commercial things, that also brings some experience from a bit larger environment where you know the processes are a bit more defined and structured out. And so we were very happy that we could win Alexander, who has spent years at Karriere, which is the largest job listing, or how do you call those, job
Portal.
site
Portal.
Job portal, thank you, in Austria. They have, I think, roughly 200 employees, and he was leading their product department, and actually was the managing director of one of their subsidiaries. And so he has greatly contributed ever since with implementing processes to be able to scale Bergfex to the next, you know, into those next growth levels. But to answer your question briefly, just to summarize again, is it difficult to implement that plan? I think no. If you define a clear plan together and you're aligned on what you want to do, then it's just a lot of hard work. It's still difficult to implement, but it's at least you're aligned and you have a common understanding of what you want to do. It's still a lot of work. It's still going to take you, you know, 6 to 24 months to implement.
And it's been now, this happened in October, right? If I recall correctly. So it's been roughly. Okay, so everything is going according to the plan so far?
What we wanted to do, we wanted to hire a new managing director. We wanted to, a second managing director. We wanted to internalize the sales team. And we wanted to focus more on the tour app and increase the prices of the tour app. All three things we did. Yeah.
Well, that's great.
Sorry, all three things Markus and the team did, because Matthias and I didn't do a whole lot.
Now, getting back to you, Markus, you mentioned this already a couple times, that you had an advisor working along your side during the whole process. Why did you take the decision of getting an advisor for this? And do you believe it's worth the effort, or is this something an entrepreneur could probably do on his own?
That's difficult to say. In our case, we don't have the financial background, so we decided for us it would be better also if you have especially if an advisor, you can choose companies. So at the beginning we had, as I mentioned, 5 to 10 different companies who were interested in Bergfex, and it was they really helped us in a lot of things. They prepared every detailed, really every information about each company, where the main focus, will be the main focus on Bergfex, and that helped a lot because they had the insights of every company already, and especially in the due diligence phase with data rooms and everything and contracts, it was for us, it was a good help. But the main reason was that we get different companies to choose. So the ideal strategic partner for us, and not just an investor, because we wanted to grow, as I mentioned. And so we had we could choose. We had a lot of inquiries of different companies in the last years, but this time when we thought we would take a partner on board with more than 50%, up to 100, it was better for us to choose the right one.
Okay. And Eugen, from your side, would you advise a partner, or what's the main reasoning for which you would recommend entrepreneurs to get advisors on their side?
Look, usually entrepreneurs are good at what they have been, obviously very successful at growing and running their business. And that doesn't mean that they're great at selling their business, because it's usually something you do once in your life, and everything you do once in your life, you're not very good at. And so I'm talking a bit against our interest, but we like working with, so you can get that advice in several forms. What we obviously as investors don't like is being in a auction. So that is, if it's a structured process, an auction means there are several investors and there are very structured rounds, and obviously that is not so good for us because for several reasons. Once, it drives the price, and secondly, and more importantly, is that the M&A advisors, if they're not very good, they prevent us from being in touch with we want to get very closely in touch with the management, because we don't want to buy the entire company, but we want to figure out who is the partner on the other side, who we're going to work with over the next 3, 5, 10 years. And for that, we need to be in close touch with these people very early on, from very early onwards. What I would definitely recommend is that for entrepreneurs to get someone with some experience of selling companies. That doesn't have to be an M&A advisor. It can also be a trusted attorney who has experience with M&A processes. So especially on smaller acquisitions that we do, we call them bolt-on acquisitions, smaller competitors that we buy in submarkets. There are unexperienced attorneys on the counter side, and I think it makes the process, it makes the process a lot more cumbersome, and it sometimes brings us into a position where we negotiate against ourselves, because we're not going to push the people we're going to continue to work with too much, because we believe in repeat interaction. So we're not going to extract as much value as much as possible out of a single negotiation, and unexperienced advisors can give poor advice that really hinders the negotiation and prevents good solutions or good win-win solutions. So I do think that having some kind of experienced advisor, experience in M&A transactions, whether that's a lawyer or an M&A advisor, is something that a selling entrepreneur should have.
Good point. Questions from the audience. I've been the one asking the questions so far, but it would be interesting to see what other entrepreneurs or advisors, what's your experience or curiosities? Stefano? No?
Alberto wants to ask a question.
Hi, Eugen. Thank you for all this insight. I would be curious to know, when you were talking previously with other possible investors, what was it that made you feel that's the wrong thing to do?
The wrong thing to do.
You always flew back to Vienna, right? Or to wherever you are, you said.
Yeah, the years before, you mean, yeah?
Yeah.
The years before, it was, we didn't have to sell, but we got 3 to 5 inquiries, and the problem was always like we wanted to develop our business as we did the years before, and sometimes it was really strange, the meetings, because you have a meeting with with the CEOs of a big company, and you sit in front of, and they're talking before you start to get in touch with them, they tell you what they are going to do with your company. So they thought, okay, for example, it was really like this. Yes, I would think your app departure would fit perfectly to Berlin, and your website we put to Frankfurt. And Mr. Kümmel, we are glad if you want to move with your family to Germany. And so that wasn't the partner we would like to have. So for us, it was very important that the fit and the match with our new investor is fine, and they see the same way, and they want to develop it the same way we wanted to do that.
Thanks.
Yeah.
I also have a question, if you don't mind. It's about valuation. Okay, so it's more for Russ, but for Eugen, but maybe also for other people who reply. So you mentioned that, for example, in Russmedia, you consider EBITDA multiples for the company valuation. Consider the current context, no? So maybe many companies would experience for sure 2020, probably 2021 with EBITDA, strange EBITDA, let me say, or maybe lower than expected. So how would you revise your evaluation process in terms of the valuation, the multiple, etc.?
I mean that I think I'm disappearing here. So there are a couple of ways of doing this, right? So the one way, if you have an exceptional year, you're gonna what's called normalizing the EBITDA. So you say, okay, because of COVID, this is a one-time effect, and then you maybe look at a stable year like 2019. This can go both ways, by the way. So this can either go, a lot of our businesses have benefited greatly from COVID and greatly accelerated. And then some, so also for us, some of the sub businesses here, like the touring app. So the app, that outdoor app where you can find, it's a map where you can find tours and routes, that has accelerated greatly. But what you need to do is you need to agree on an EBITDA that is under normal circumstances would have been a fair EBITDA for that year, and that obviously leaves a lot of room for discussion, right? Because everyone has a very different opinion on that, and you can't always agree. And if you can't agree, I think the price finding is going to be impossible. But as long as you can agree on what a normal EBITDA is, and that requires agreeing what's going to happen going forward, right? If you let's say you want to invest into, example, cruise liners, in the cruise liners business, what is your conviction of how quickly the recovery will happen in this industry? And depending on that, you're going to have a different conviction of what normalized EBITDA should look like. But I think, look, COVID is combined with the lockdowns is a once in a lifetime event, and I've heard, and I think it's been more difficult than ever if a business has been affected to agree on what a normalized level would look like.
For sure.
So sorry if the answer is a bit ambiguous, but I think it's
no, but I understand it would be extremely complex. No, in either way, like either some companies will be over-evaluated or under-evaluated a lot. So it's a moment where it's very difficult, no? I
mean, if you look at the M&A market, maybe that's interesting. Some people in here is that it's really heated up at the moment. We're getting a lot of companies are approaching us, and I'm assuming other people who are on the buy side, and then the numbers look great, and they show 2021, they show year 2000, and they will sometimes show the year 2019, and they won't show the picture of anything before 2019, and you see a lot of hockey stick development. I mean, look at e-commerce. It's been fast forwarded for 5 years, by 5 years. And that the same thing has happened to a lot of other businesses. And so I think the question we have to ask ourselves here is in which of these cases is it sustainable? I think e-commerce is there to stay, but is the same thing true of, for example, in the construction business that has experienced an unprecedented boom, do-it-yourself, DIY businesses? Is that here to stay? I'm not too sure. So obviously we're having a really hard time arguing with the entrepreneurs because they obviously don't, well, maybe they do believe it because otherwise they wouldn't be selling right now, but they won't publicly admit that.
Any other questions? All right, I have another one until you think about it. Markus, getting a partner, an investor on board might be something that the team, the employees might be sensitive to. Questions are asked, worries, people worry about change. How do you communicate this change to your team?
That was also a question I asked Eugen what we should say. So. Because he has the experience, but we decided to communicate it one day before signing to our employees. But our employees are since about 10-15 years in our company, and we're a really small one. But we decided to tell it one day before, and that what was also very important and helpful is that Eugen and his team was 1 week later has been in Graz and was talking to the employees, because they were afraid what happens next. Do I keep my job and everything like this? And if they've seen how they act and what they are going to do and they want to develop, especially in our development, they were really glad that they came to Graz and also talked to them.
The external sales team was not that happy when we first met.
No. Yeah, but that was what we did really now. We just in-housed the whole sales team. We had a sales team for 12 years, an external one for all accommodations, and we're just in-housing the team at the moment, and it looks real fine because you have all the direct communication now to our customers, and that was a big step for us in the last month, but that team wasn't really glad. That's true.
But we're also not in the business of making everyone happy, so.
But no one jumped ship, when they first heard about this change, did they?
No. We were talking a lot to them, yes, and explained to them what is the focus from Russmedia and how is the structure, because they were afraid, especially if you sell for example, to a big company in other countries. Yes, what happens? Do they keep the company in Graz, or do you have to move? But we could tell them that this doesn't will be the case, and so we just tried to explain as detailed as possible what we also discussed with Russmedia.
All right. Any other questions? Hi, Gregor.
I have one question regarding cap tables, shareholder structures. What's the expectation from Russmedia? What are the requirements so that you feel comfortable with the structure? And how do you deal with passive shareholders if you have someone left from a previous phase who owns a big share in the company?
Yeah. So we're quite flexible. We like to take majority stakes because we think it's a good counterbalance to the operations. So our partners are running, they have the feet on the ground, they run the business. And so they have a lot of power in the day-to-day business. So we think that us owning a majority gives a nice counterbalance. So we will like to own more than 50.1%. And we're kind of between the 15.1 and we say up to 80%, because anything that goes beyond 80% means that our partners have less than 20, and then they lose what we call skin in the game. And so we're only 6 people in the investment team. We have over 500 employees across all majority holdings, and it gets very difficult. It's not our business of being the controller and having a very hands-on mentality and being very involved in day-to-day operations. So we need to work with the skin in the game. So we need to be sure that our partners are monetarily aligned with us, 100% aligned. So we're kind of, our cap table preference is between 50.1 and 80%. On passive shareholders, very honest and open answer, we don't like passive shareholders apart from us. We will love to work with other shareholders who also contribute, but we believe that as long as, and that is also valid for us, we're going to be a shareholder as long as we think we're the best owner or best partner in the business. If we no longer believe we're the best partner and just become a passive shareholder, then we would expect our partners like Markus to tell us, and then we can either initiate a sell exit process together, or we can find someone else to buy our shares. We don't have any emotions around that. But on the other side, we don't have in any of our companies any passive shareholders. I think if there are other ways of people, I'll put it that way, there have been a lot of requests on this, but especially from people who run the businesses now, that they can keep shares once they exit. But I always say it's way better if you take that money and diversify it and invest it into a diversified portfolio. It's a win for yourself, and it's a win for us. I don't understand why you would be a passive shareholder in a minority stake where you don't sit in the operations and run the business. I think there are better ways of putting your money to work.
Thanks.
That answered the questions.
Any other questions for Markus and Eugen?
Can I add something here maybe? Sometimes we have the situation where the founder doesn't want to sell 100% and he will assume a board or chairman role. And I think that is something that is helpful to a certain extent. I don't think it's good if that person holds more than, I would say 5 to 10%, because you're taking that share away from people who potentially run the business operationally. And a board role only works so long because you lose the connections in the business unless you have a role then where you're actively involved in that environment and continue adding value to the business. I would say that in the long run, it's better to relinquish control of or sell off the remaining shares. Sorry, Cheta.
No, I was just wondering, what would be the main learnings? Like for me, what I'm getting is that, price is not all that matters. I can only imagine big fancy corporate companies have deep pockets, but apparently it's not everything. Markus, from your perspective, what were the, let's say, top 5 learnings of this process?
Yeah, just as you mentioned now, it was the same case what we had. We had better offers from different companies, but really decided us for Russmedia because the fit was, for us, it was the perfect fit, yes, and they don't get any money from him now. But
you're actually paying for dinner tonight.
Oh, so but it was really like this. We are straight until signing, and after signing, we got the offer. If we change in future, we can always talk again with them. So for us, it was very important to run the business as we still want to do it. So if you don't have the passion to do it, what you want to do, I think it's not possible to do it for a longer time.
All right. And I see here some other things on the slide that some of them already mentioned. The professional M&A advisor, the strategic part. What else from this or some other learnings you could highlight?
Yeah, what I just said, for us it was a very important that the mindset with the company we work is the same we have, and we have a good match. And yes, for the second one was for us just to have a good advisor, because it wouldn't. I think it wouldn't have been that a good transaction or also a process. Just to mention, we are a small company, and in the due diligence phase, we had about 400 different documents in the data room where 10 parties ask all the day. And that was also for our case. It was a good decision. And what was very important to find out, but what's not really very easy all the time, is what is the real strategic decisions from your partner, what he's doing with you in the future. Mm-hmm. So it looks much better if you talk to them, because they want to get the partner, become the partner, but you have to read between the lines.
I'll add one. I want to highlight one thing here, is that, and that is actually the second point I think is the most important from my side, is if you sell a company, you need to understand, you need to find the right partner. And I'm not saying we're the right partner for anyone who wants to sell, but what I'm saying is that for whenever an entrepreneur has an idea of what he wants to do with, he or she wants to do with their company, it's, if you do 100% sale, then sell to someone, and if you don't care about what happens to the company and the employees, then sell to someone who gives you the highest price, right? And that's usually a strategic acquirer. But if it's more complex, and it usually is, then find the right partner to raise money from. If you're a VC company that grows at 200% year over year, then we're not the right partner, because we don't pay these prices, or we can't pay these prices, put it that way. But if you are looking for if you're in a situation where you believe you want a partner to continue scaling the business you're currently running, and wanted a partner on eye level to run this business with, then we're the right partner for this.
All right. Thank you both for sharing all this information and the learnings. Any other questions before we're preparing to wrap up? No. All right. Well, thank you very much for joining today. We'll have some other webinars prepared, among them one with Alexander, also from Bergfex, that Eugen mentioned just earlier. And we'll also have a webinar with the CEO of Jobico, Martin Lenz, and many more to come. So make sure to follow our social channels, LinkedIn, Facebook, Instagram, and please feel free to reach out to any of us if you have any questions, or if there's more that you would like to know about this process. And thank you all for joining. Thank you, Markus, and thank you, Eugen, for sharing your learnings. And well, have a good day, everyone.
Thanks, everyone.
Thank you.
Bye.
Goodbye.
Thank you.